Hi guys, this is Andy Yu from andyu.com. Okay, so today we're going to just give you a market updates on the on the Singapore market. So basically, yesterday on the 14th of April, the MAS Monetary Authority of Singapore announced that its monetary policy for this half year is going to be to stop the Sing dollar from rising. Okay, so by having this news, let me explain what is the possible effect and what is the our outlook on the market. Okay, so what does this policy of Sing dollar appreciating or depreciating actually affects the most? So usually we will ask this question: who will actually uh, benefit or maybe suffer from a rise of a Sing dollar? So when Sing dollar is going upwards, okay, basically, more people will like to park their money in Singapore. But if Sing dollar is not going to go up or maybe it's going downwards, then the most people will not like to park the money in Singapore, because when people park the money in Singapore, they determine on depends on a few things. Number one is the interest rate. Okay, so if you park the money in Sing dollar, Singapore dollar is rising, and there's Sing dollar putting in the bank, there's a interest rate, then people will park here. But in this case, Singapore, if you put the money in the bank, you get zero interest. So so by having a strong Sing dollar, more people will put money in the bank. By not having a strong Sing dollar, most people will look out for other investment, or maybe to move to somewhere else where the currency pays interest, or maybe the currency is appreciating. And second thing is, okay, people will park more money in Singapore if the property prices is rising, is on the rise, and people will this will invite the speculators, this will invite the investors from overseas, so funds will flow in if property market is strong. And last thing is the stock market. So if Singapore stock market is on the rise, it's a bull market, and then this will attract the Sing dollar, and this will affect the foreign investors to park more Sing dollar in Singapore. Okay, so in this case, okay, for the past few years, we have seen that the property prices has been slowing down. The stock market has not been performing very well over the past few years, and this Sing dollar is something that what Singapore is still surviving on. And Singapore is not an export sector, it's not an export export country, so it's more of an import or a financial hub. Okay, so over here, the rise in Sing dollar, okay, will affect actually the funds from flowing in, and this actually makes a big deal. Okay, this will actually determine the banks whether they are on the rise or whether they are coming down. Okay, so this is something that I noticed in October 14. Okay, so every year, okay, the MAS will announce two time. One is in April, the other next time is in October. What is their monetary policy towards the Sing dollar? So previously they said that they just want to slow the appreciation of Sing dollar. Okay, so basically, okay, the central bank is on the easing, okay, of its monetary policy, trying to revive economic growth. So in this case, they are trying to improve the industry, or maybe the export. Okay, so that when people with this lower this not so strong Sing dollar, they will able to sell more things to overseas. Okay, so after the October 2015 monetary policy from MAS, what happened is we noticed that the banks, okay, start to turn around. The banks start to turn around. Okay, one of the reason is Sing dollar is dropping, no interest in Singapore banks, and second thing is also the USD is rising. So if let's say the news of this Federal Reserve going to increase the interest rate, okay, which this year actually the Federal Reserve already decided that they're going to increase the interest rate for two times. Okay, so for the two times, the next possible month that we will seeing a USD interest rate hike will be in June. Okay, So looking towards the next few months, okay, now it's in April, mid of April. Looking into June, okay, we are just about 1 to 2 months more. Okay, so over the next 1 2 months, let us just monitor that if the banks were to turn around. So over here, if we see this turn around, maybe it takes 2 to 3 weeks to turn around, then we have to be careful. Okay, because the previous time the bank turns around, because why? The USD is strengthening, so funds actually flows out of the Singapore stock market. Funds actually flows out from the Sing dollar. People will, okay, like to put more money in the USD. Okay, so market was overall, the overall market is bad as well, so it actually created this the downturn of the bank stocks. Okay, so if let's say now we at a downturn, of course there's not much of a worry because it already priced in. But if let's say now we are actually on the higher side of the, okay, compared to the low, we are actually on the higher side of the stocks. Okay, so the few things we have to notice is the increase in interest rate in June. Okay, the sell in May go away. Okay, effect. Okay, when people are in profit right now, most people are in profit, they have a choice to take profit. So if we see any take profit in the next 1 to 2 weeks, okay, do take note that have to be a bit cautious. Okay, so same thing as OCBC again, previous monetary policy. After that, okay, the market start to turn down and, okay, hit the bottom where the Federal Reserve say that there's no more they won't be increase the interest rate so fast, and also they're saying that maybe there's a negative interest rate policy. So over here the markets have a strong rebound, okay, since then, because of the USD weakening over the past few months. Okay, so over here you have to, okay, take note. Okay, over here uh, let's see if the banks start to turn around. So instead of selling immediately, what I suggest is we put a marking, let's say for OCBC you put the marking at $9. If it falls below the $9, then that's what we call a turnaround. Okay, don't need to sell now and anticipate that there's a turnaround. Okay, so this is what we call a trailing stop. Okay, you can put at $9, you can put at 8.90. Okay, depends what is your view basically. Okay, so over here let me just take this example on the other side of the market, the Malaysian market. So the same thing, Malaysian ringgit is back to 8-month high, okay, with the help of inflow. So with the weakening of the USD, okay, all other currencies start to rebound. So you see that the Malaysian ringgit also comes into the 8-month high. So again, when you talk about the currency, okay, for Malaysian ringgit, it affects two major sector. So the one sector is the bank. So if the currency is strong, banks is going to be strong. So you see Maybank, okay, from February price start to move up, all the way up, same as other banks. So with a strong currency, okay, the strengthening of the currency, the banks who actually host the most local currency will benefit from this effect. If the currency start to turn down, okay, if you see in August, September, when the currency is weak, who will benefit? The export sector. So if let's say we say that we put another marking at, let's say $9 for this Maybank, if Maybank turn around and break $9 point, then this will be the time that you should be looking at the export sectors, because when the weakening of a Malaysian ringgit, okay, this will be beneficial for the export sectors. So I hope that you benefit from this monetary policy, and also talking about this the banks, okay, and the currency. So all these three is all linked. So you have to think in a way that what will actually help, which sector will actually help with when the currency is strengthening, or when the currency is weakening. Okay, so I hope that you enjoy this video. I hope that this has been helpful, and I will end this video here, and I hope to speak to you again. Thank you very much.